Hello, folks. Welcome to Pro Trader Strategies. It's Thursday, September the 2nd. I'm Eric Wilkinson, and we are an educational company here. So what we like to do is talk about the economic data, see how that's impacting the overall markets. Then we'll talk about markets, directionality, and ultimately we'll talk about option strategies or trades that we can implement into our portfolio based on all of these assumptions we come up with, digging into the devil of the details. So if that's something you want to be a part of, smash that subscribe button, and right next to it there's a bell. That bell will notify you if I pop in here unannounced. Yes, we do have scheduled times, but like yesterday, I found a trade early in the morning. I wanted to make sure that you guys were seeing that pretty much live, so I popped in here a little bit early. Make sure you have that notification so you can take advantage of that. All right, so without further ado, let's get on with the economic data. One other thing, make sure you guys comment. If you guys want me to look at a particular stock, ETF, future, throw it over there. We'll go over it and see if there's anything in there that we can find an opportunity in. All right, so let's talk about the economic data. Across the pond, not really a whole lot other than we did get some economic data out of Switzerland, basically, and retail sales coming in a lot lower than expected at negative 2.6%, expected to be a positive 0.2. Now, I don't really usually talk about them, but this being that big of a miss for the Swiss is at least noteworthy. All right, so then that's about it for across the pond. We did have a couple of bond auctions, but for the most part, in line with expectations. Spanish unemployment a little bit better than, or worse, than expected there. Not as many hires as they were expecting. All right, so United States, we got our economic data here, and it was in the form of non-farm payroll. Now, tomorrow, everybody's waiting, folks, on the unemployment number, but, we all like to look at these. So the labor costs increased to 1.3%, expected to be 1%. We want to see labor cost increase because that's usually a product of demand. You got to continue to hire because of all this demand coming into the system, right? So that is good. Non-farm productivity comes off a little bit as you're hiring more. That productivity is expected to come off a little bit. So those levers and pulleys are working correctly in the market, if you will. So 2.1% expected to be 2.4% on the productivity. Factory orders in line with expectations, so not a whole lot to see there. And natural gas storage is pretty close to being in line there. Most people are probably going to be waiting to hear what these Fed governors say, but folks, they can't really say anything at this point. There's not enough economic data out there for them to really change their minds. A lot of them are going to be talking about unemployment and inflation. Tomorrow is going to be the major number we're going to be looking for in order to determine whether or not these hirings are coming on, because we've met the inflation mandate on raising interest rates, not so much on the hiring. So that number is going to be what the Fed is really starting to key on. All right. Now, let me share my screen here and we'll start talking about the overall markets. We've got crude oil moving higher here again today. Now, I was just like talking till I was blue in the face yesterday. We're seeing a lot of these manufacturing numbers come off a little bit. Distillates, which goes into the manufacturing for making plastics and things like that. Those types of demand aspects were waning a little bit because we're seeing the manufacturing sector shudder just a little bit. So crude oil moving higher today. Why? I think it's basically because we're seeing this dollar starting to weaken here. We have moved above the 50-day simple moving average right now. That will be a major coup for the bulls if they can get it above that 50-day simple moving average and into that 70 handle, which is a psychological level that we've been talking about. I think the bulls will have the bears on their heels if we can get a settlement above there, because I was more expecting us to come down, test the point of control and or this value area, or sorry, this Fibonacci, 78 Fibonacci. So I was more bearish than this. I don't think that we're really seeing the demand for crude oil here. What a lot of people are talking about is on the East Coast, this Ida turned into a tropical storm. We talked about the Centennial pipeline shut down. That's going to be delivering gas to the East Coast, and that's shut down right now. So the East Coast could be having some issues. That being a supply issue, is likely the driver here in crude oil, but I don't think that that is sustainable. Bonds unchanged. Everybody's folks. It's a sit on your hands type of day. It feels like, because everybody is kind of waiting for what happens tomorrow. And I think that today is a hedge your position or portfolio type of day. We can see that gold futures sitting here right in the 1800s, but at the point of control. And this is the point of control for the volume here. That's where the most volume has been spent. So it is going to be a comfort zone for crude oil. Now, gold. Although gold should be rallying, folks, if we're seeing crude oil rally off a weakening dollar, we should see gold rallying on a weakening dollar. That's why I'm leaning towards that. Crude oil is leaning towards the lack of supply there. Bitcoin is moving a little bit higher. I talked about this yesterday. Ether, I think, is going to 20 before I think we'll see like 65 again in Bitcoin. But I think that ultimately we're just going to see a major outpace move in Ether versus Bitcoin because of the JPEG buying going on, because people have to buy that Ether in order to get the JPEG. So they're going to drive the price higher, right? VIX is coming off a little bit yesterday. We just had the markets at the throughout the day make that move, and then towards the end of the day, it kind of fell flat on our face, despite the fact that, like here in the NASDAQ, we did make an intraday. This was during the day session high yesterday. I don't have the breakdown, but this was during the day session there, and market's pretty flat. Everybody really, I'm telling you, it feels like it is just a hedge or portfolio based on an outpaced move here in the equities on that number tomorrow. So today, that number comes out, folks, before the equities open tomorrow. So that's another major aspect of this whole trying to shoring up today. E-mini S&Ps, they are making a new all-time high here today. You can see just a couple of ticks away from that. But again, it is a slow trudge to the upside, not on a massive amount of volume. So to me, this isn't really a confirmation necessarily or a breaking of the pattern here. We had a nice topping pattern going on here today, or the last couple of days, but today that is broken. I don't think we're out of the woods yet for seeing those type of setups, because we're just kind of rallying on slow volumes, and that's a little bit concerning to me. All right, XLU is the one that I'm looking at for, folks. Why? Because we have high implied volatility in here. Yeah, we just came off of a pretty good spike there. But with an ETF, I think that the utilities are going to settle down here a little bit. We just saw crude oil making that move higher, and talking about how I don't think that it's really anything other than a worry about the supply chain issue. Well, a lot of these energy guys are in the XLU. It's the utility ETF. And we have NextEra Energy, Duke Energy, some of those, Dominion, Exelon. And so those guys are the major stocks in this indice. I want to play those for being just benign and trading sideways for the next foreseeable future. So I'm going to talk about those types of trades in the webinar this afternoon. So make sure you go to that webinar. We're going to be talking about the strangle and how you can implement this around a portfolio, what kind of assumptions we would want in order to implement this strategy, what type of implied volatility is it, what is going on in the environment around that, should we be buying options or selling options. I'm going to show you how to quickly and easily spot whether or not you should be doing a credit spread or a debit spread, or just doing something for a credit or a debit. Naked is a realm of possibility as well. So I'm going to be showing you guys how to take advantage of this with my directional assumption. You guys, I'm not here to teach you guys what your directional assumption should be. I think your directional assumption is probably about as solid as mine. So what I do want you to do is learn about how to implement options around something like that. So, one thing I forgot to mention at the beginning of this, why don't you guys go down there and smash that like button for me? Because I need you to feed those bots, right? You're not helping me out. You're feeding those bots. Those bots get a little cookie on that like button. They do is they run out and try and find somebody just like you. So let's train those bots to find some folks that like you will enjoy something like this. So do that. Those bots go running, and we can get more content going. All right. After that, comment. Make sure you guys are talking to me over there on the side, especially during the webinars. You guys drive the content. I want to know what's going on in your minds. All right. So please, the only way for me to figure that out is for you to comment. So do that over there on the side. And we'll be talking about the strangles this afternoon with this particular trade. I haven't taken anything off in my portfolio. I do have a couple of working orders at this point, but they're pretty far away. So I'm trying to get out the rest of, what is it? The Pfizer, I think it is. Or they're way away though. I can double check on what we got there. Yeah, the win is I have on some short puts in win. They're about 20 cents away. It's trading around 68. I got a 40-cent bid in there, and not really even close. All right, so those are the things. I got a couple working orders on, but nothing really to talk about because they're not going to get hit. This is the one I want to talk about, how we can set up a strategy around this when we have high implied volatility and an underlying that just looks like it's not going to go anywhere. So again, before you guys go, smash that like button, feed those bots, let those guys go out and crawl the internet looking for people like you. Subscribe, hit the link over there where it's got a little bell. That bell will give you an indication when I pop in here unannounced like I did yesterday and talk about trades that I'm doing. And finally, comment over this side, folks. I want to make sure you guys are clear concept before we pass on any other concepts. All right, so that's all I got for you. Other than if you can't take that, take it easy. And see you this afternoon. Bye for now. Right after the close.